The stock market has been a good forecaster from time to time in the past. It also has been a rather poor forecaster occasionally. For example, the last 4 or 5 years, the stock market has been booming along.
Warren Buffett is one of the richest and most influential people on the face of the planet today, but that was not always the case. Although he had big ambitions, Warren Buffett has not always been one of the richest men in the world. He only became a billionaire when he was 50 years old. As a matter of fact, more than 99% of Warren Buffett's wealth was earned after his 50th birthday. Hello everyone, and welcome to Business Minds. In this video, we will explain how Warren Edward Buffett became the infamous Oracle of Omaha, a nickname coined at him for his investment mastery. But before we begin, we would like you to subscribe to the channel, like this video, and hit the notification bell icon so you do not miss out on any amazing and entertaining content. Buffett's story is not your dramatic Hollywood rags to riches story, as he was born into quite a stable family. Buffett was born to Howard and Layla Buffett on the 30th of August, 1930 in Omaha, Nebraska. His father was a successful stockbroker and 4-term United States congressman. Howard served terms on the Republican ticket but adopted libertarian views. Despite being born into a well-off family, making money was one of his earliest interests. At the young age of 11 years, Buffett kicked off a lifetime of investing by making his first stock purchase. The future billionaire bought 3 shares of the oil company, Cities Services, at about $38 per share. Eventually, sold the stock at $40, making a profit of $2 per share. But he learned an important lesson about patience when the price later shot up to $200 per share. This is why Buffett now suggests investors not watch the market closely and own good, reliable stocks for a long time. In his senior year of high school, Buffett, along with a friend, purchased a used pinball machine at the cost of $25. Buffett began to think about the potential profit and placed the machine in a nearby barbershop. Within 3 months, he owned 3 machines in 3 different locations and later on sold the business to a war veteran for $1,200. Besides this, he used to sell soft drinks and had a paper route. When he was 14 years old, he invested his earnings from these small endeavors into 40 acres of land, which he then rented for a profit. He applied to the University of Pennsylvania at his father's suggestion and was accepted. Unimpressed, Buffett left after 2 years, transferring to the University of Nebraska. Upon graduation, his father again urged him to pursue a graduate degree. Harvard rejected Buffett, but eventually enrolled in Columbia after learning that Ben Graham, the father of value investing, was a professor there. After discovering that Graham is on the board of Geico Insurance, he took a train to Washington, D.C. and knocked on the door of its headquarters until a janitor let him in. After asking whether anyone was working that day, he found Lorimer Davison, an executive at Geico. They talked for 4 hours while Warren questioned him on the business and insurance in general. The two eventually became lifelong friends, and many decades later, Davidson said he found Buffett to be an extraordinary man just 15 minutes after their first meeting. After their discussion, Buffett was so excited about Geico that he spent most of his savings the following Monday to purchase Geico stock, which eventually turned into a huge fortune. Today, he owns Geico entirely. Upon graduation, Graham refused to hire Buffett, suggesting he should never step on Wall Street. Buffett offered to work for Graham for free, but he still refused. Meanwhile, Buffett returned to Omaha to work at his father's brokerage firm while taking a Dale Carnegie public speaking course. Using the techniques he learned from this course, he felt confident enough to teach an investment class at the University of Nebraska, Omaha. During this time, he also invested in a gas station as a side investment, but it was unsuccessful. In 1952, he married Susan Thompson and they started a family. 2 years later, Graham had a change of heart and offered Buffett a job in New York. Graham was a tough boss to work with, adamant about stocks that provided a wide margin of safety. This would later become the basis for Buffett's investing strategy. Once on Wall Street, Buffett had the chance to put all his investing knowledge to the test. In 1956, Graham retired and closed his firm. At this, Buffett's personal savings were enough to start his own investment firm. After gaining experience in New York, Buffett returned to Omaha, launched Buffett Partnership, and purchased a house. In 1960, he asked one of his partners, a doctor, to convince 10 other doctors to invest $10,000 each in his partnership. Eventually, 11 agreed, and Buffett pooled their money with just $100 of his own. Buffett continued with his investments throughout the early 60s, and by 1962, he had grown his investors' assets to a total of $7.2 million, with his own stake worth over $1 million, fulfilling his promise to a family friend at the age of 13 that he would be a millionaire by the time he turns 30, or he will jump off the tallest building in Omaha. This was the time when he joined forces with Charlie Munger. Their collab eventually resulted in the development of Buffett's famous investment philosophy of looking at the value of investing as something more than just an attempt to squeeze the last few dollars out of a dying business. Along the way, they purchased Berkshire Hathaway, a dying textile mill, at under $8 per share. What began as a value play quickly became a long-term investment when the dying business showed some signs of life. Cash flow from the textile business was used to fund other investments. In 1985, Buffett shut down the textile business but continued to use the name. 4 years later, Berkshire stock was now worth over $8,000. Warren now had a personal fortune of almost $4 billion. By 2006, he had grown Berkshire Hathaway into a behemoth with stock worth over $100,000 per share, while the investor's own net worth had grown exponentially to top $40 billion. Buffett's investment philosophy became one based on the principle of acquiring stock in well-managed but undervalued companies. He purchases stocks, withholding them indefinitely. Coca-Cola, American Express, and Gillette met his criteria and have remained in Berkshire Hathaway's portfolio for many years. He often purchased the entire company, but let their management teams handle the everyday business. You would think that with this amount of wealth, the Oracle of Omaha would live a luxurious life, but Buffett is famously frugal. He eats at McDonald's for breakfast daily, spending no more than $4. And he still lives in the same house he bought in 1958. From childhood side hustles and stock purchases to studying under investing pioneers before launching his own investment firm more than 60 years ago, he has spent his life fine-tuning his conservative approach to investing that favors long-term value over short-term investments. What do you do with your money when you're the world's most successful investor? If you're Warren Buffett, you simply give it away. Buffett stunned the world in 2006 when he pledged to give away 85% of his fortune to the Bill and Melinda Gates Foundation. Buffett's donations will come in the form of Class B shares of his Berkshire stock. His total donation to the Gates Foundation is 10 million shares, which will be given out in 5% increments until his death or until the foundation fails to meet the spending stipulation. Buffett has always planned to give most of his wealth to a charitable cause, but insisted that it would occur posthumously. The change of heart was a logical move on Buffett's behalf. In 2010, Buffett and Bill Gates launched the Giving Pledge Foundation and began recruiting fellow billionaires to pledge to give at least half of their net worth to philanthropic causes. As of 2019, over 200 people have joined the campaign, with more than $500 billion pledged to the cause. Today, Berkshire Hathaway stock is valued at $478,675 per share, as the company portfolio represents a cross-section of the American economy and includes some of the world's most profitable companies, including Amazon, Apple, American Airlines, Coca-Cola, and Disney, to name a few. That's it for today's video. Let's see what the future holds for this investment icon. Leave a comment on what you would do if you had as much wealth as Warren Buffett, and don't forget to share this video with your friends and family. We will keep you entertained with more insightful and helpful videos. Subscribe to our channel and press the bell icon.